Good morning, my fellow traders. Today is Friday. Time is 12:52 a.m. for my time here, for my end here. And first, I'd like to thank you, my subscribers. I love you, fam. And second, I'd like to talk about the reducing volume in the market. The market is really a crazy place to be during these periods, especially having the last days of the year by. It's a really crazy place. First, we have to reducing volume and possible lockdown in the United States, so in preparation for the holidays. And they are still battling with the after effect of the movement of people during the Thanksgiving time or the Thanksgiving day. A lot of interaction because of the traveling here and there. First, if I go into the details of the video, I'd like to quickly throw a disclaimer here. This video is for educational purposes alone. This does not by any way encourage you to go and put in live funds into the financial market because it's a very scary place. So it's just basically for educational purpose. So on my screen here, you see the Aussie yen on the daily time frame, the Aussie yen, and basically my previous video I made a probably I'll call it a signal or an analysis of where the Aussie yen may probably go to, and I made some projections and I put some of my points to note or take profits here. I opened some very small positions, 0.03, not than 0.01, 0.01 here, and 0.03 around here. So I was looking for an expansion up after I retest the 77 round figure psychological level, and here we got the expansion. I will see it reached the old highs as I predicted because it's going to take the liquidity up there, and that was a very nice one. I'll show you the results probably at the end of the video. It's a very interesting one. So before I go into the pair that I'm going to analyze today, which is the Euro USD, I would like to quickly throw in some analysis, top-down analysis of the fiber. First, I'm starting with the monthly time frame. Well, you will see a nice downtrend line. Well, I don't use the trend line to trade. I use it to guide my thought process because you can't rely on the trend line if you want to be a financial beast in this market. You can't rely on the trend line because the market is 99% manipulated and is on the hunt for those who use retail mindset, something like trend line. But basically, you can also use it if you have other information that are very useful or be useful in the market. This other information I will be revealing in my YouTube video, so I'd like you to subscribe and stay tuned to them about how to also use this beautiful information and beat the market. So basically, you can see from a retail mindset, you see a nice trend line, and when you see a trend line, you say, oh, it touched second touch. After second touch, you wait for the third touch, then you go short. And you see many retail mindsets would have gone short here. What does the market do? It goes down, and when you expect it to respect this trend line again, see that the market just blasts through it and retested it and goes to the moon. And that is the story we're still saying till now. So you see, it's not really favorable to what we've learned or what we've been taught as a beginner trader. Because as a beginner trader, you say after the two touch, the third touch, you sell if it's a downtrend. Or after the fourth touch, you sell. And we can see that that's not what's happening here. So drop down to the daily time frame. But first, I'd like to show you something on the monthly time frame. So after the market breaks this and retests, we're expecting it to go back again to this hold highs because many liquidity will be there. Many people would have put there again their stop losses there and gone short because the retail mindset is when they touch the third time, you go short there if it's a downtrend trend line. So we're anticipating it makes this place, and you can even see that even the fundamental aspects, I don't trade the news, but I also use it to make my decision. I'm more like a technical analyst. So from the fundamental aspect, you see that the Euro USD is buying because the USD is really getting weaker and weaker. The stimulus about $900 billion that was supposed to be given is still having inches along the way. And because of that, we can see that the strength of the dollar is waning. So back to the daily time frame. What can we see here? After a nice upthrust here, we see a pullback. Well, many people may not regard it as a pullback, many people may regard it as a probably change in direction of the trend. Why? Because of these two beautiful candles here called the tweezer top. The retail mindset, when you see tweezer top at a very nice high, you say, okay, it's now time to sell. It's a nice rejection. But as a technical analyst and also one who trades price structure, or basically technical analyst, you see that most times when the market goes, market moving trends, goes up, down, up, down, up, down. So it is very logical that after such a big move, breaking the psychological level, that is 120 psychological level, there should be some sort of a pullback. But why was this pullback there? Well, that gives us to the next concept, the word of the day that I'm going to discuss with you, my beautiful subscribers today. I said going on forward in my video, I'm going to be sharing some beautiful tips about how to use the news to trade. Not relying on the news to trade, but how to use it to trade. So why is it that we see this pullback? Like I said, the news is an excuse. Well, what happened around 2:30 GMT plus 1? Well, there was a release of news around this region, 2:30, which gave birth to the boosts in the candles, in the daily candle here. It gave birth to that boost that we see here. This beautiful momentum in this daily candle gave the beautiful momentum there. So, what's the name of that news that came out? So I can use it ongoing, probably because it's a weekly news that's always coming out. It's called the initial jobless claim. It came out around 2:30 GMT plus 1 my time, and basically the initial jobless claim, a data point issued by the US Department of Labor as part of its weekly unemployment insurance weekly claims report. Basically, what all those grammar is for is just like the Wikipedia definition. This data or initial jobless claim refers to claims for unemployment benefits by unemployed individuals with state unemployment agency, meaning that in a state where there are unemployed people, these unemployed people fight to get benefits from the state because they are unemployed, probably like to get like sort of a relief for them. So what use is this initial jobless claim for the forex market? Well, it is used by policymakers in conjunction with other employment data to determine the strength of the labor market. And also, it's also used and watched closely by financial analysts, which I would like to be called one, because it provides insights into the health of the economy. So typically, when we see that the initial jobless claim is more, that is, the actual is more than the consensus estimates, or the actual is more than the predicted, it shows that that currency, which is the USD in this case point of view, is weakening, meaning that there are more people who are unemployed and fighting for this relief or this program for the government. But when we see that this actual is lesser, that the actual is lesser, this actual is lesser than the consensus estimate or the forecast or the predicted, it shows that it is strong. That means the currency is getting strong. So basically, these initial claims typically rise before the economy enters recession. So there's a possibility the United States might be entering recession soon, but the economy so far, Jerome Powell has been saying that has been doing beautifully well, even better than they expected, which is true. And when we see that it declined before the economy, if you see that it declines before the economy starts to recover. So when we see that there are less unemployed people, we see that the economy is recovering. So when it was released around that time, how did it affect the financial markets? I'd like to take you back to my charts. Yeah, good. Down to the 15 minutes, down to the 5 minutes time frame. So what are we seeing here in the 5 minutes time frame? Let me take it back to the 15 minutes time frame so we can get more or little coverages of it. So what are we seeing here? If you notice, this place that I highlighted is a place where the retail mindset will say it's a nice resistance. Why? Because of the resistance here, the resistance here, the resistance here, and most times they'll tell you resistance region, which is true. So what happened in that same region? Well, when it came to this place where many people will likely want to buy because of the resistance, we'll see this huge spike again to take the stop losses of people. But before this huge spike comes, you see it as if it respected it here. But what happens after they place that order? We see that the huge spike comes to take the stop losses that have been kept there before it moves upward. So we say that because of the initial jobless claims is higher, the unemployment, people who are employed are filing for relief benefits from the state agencies are high. It shows that the United States economy is weakening. And when we pair it against the euro will be getting strong against it. So we will be buying the euro and selling the United States dollar, the US dollar. So many people who traced the news would have gone in for a long here at this point. Immediately after they see this pin bar, this bearish pin bar, they would have gone for a long. And when they go for a long here, it would have, just like I said, just deceive them a little bit, then it came down and take their stop losses. Others may have put their stop losses here. Well, it doesn't really matter though. But because of this news, that's why we had that pullback all through the week. And we'll see the price is now pumping up. Let's drop down to the 5 minutes time frame to see the time in which this news came out. It came out around 2:30 my time here, and that was when this candle was being formed. This neatly shaped candle bottom was being formed. Then most people have gone for that long there. But basically, what am I looking at for the Euro USD? Well, I like to take the opposite trade of the retail trader. I like to trade and target your stop losses also. So what am I looking at? I'm looking at these equal highs here that are marked. I'm thinking at this 121,750 level, the price is going to reach for it and take the liquidity up here. Many retail traders would have put their stop losses here when they are going for a short, so the price is usually magnetized to such positions. Usually magnetized. So I'm trying to see the US dollar get weakened as probably they go through their lockdown. So today may be the last, this week may be the last week in which we see heavy volumes of trading. And before trading really goes back to normal, maybe mid-January before we see that kind of. But the technicals are saying otherwise because the market has been crazy. We can see big upthrusts and here and there in price downwards or upwards, depending on the pair. So basically, we discussed what the initial jobless claim is. It's just a data that talks about the unemployed people filing for probably sort of a relief package from the state unemployment agency, telling them that they are unemployed and they will actually need their help. Basically, that's what it is. And when we see that this value is higher than the forecasted, we see that the currency which that data comes from becomes weakened, as in the case of the US dollar here. And if it is less than the forecasted or the consensus estimates, we see that that currency strengthens as opposed to the one it is paired with. So basically, I said I'm going to show you the results of the result of my trade on the Aussie yen. So custom period, December, I took the trade on, I think, Monday. Announced it here. So Aussie yen, I took the 0.01 lot for a scalp for that day, and I closed this 0.03 in partials, meaning that I closed 0.02 first, then I close the full position later on in the market. And this 0.01, I let it ride. It's always good to trade like that. Well, different individuals has different way they manage their trade, but it's always good to trade like that because it helps you, give you a sense of closure that you've taken something away from the market. Always take partials, like my mentor used to say. So till we'll see you again next time. We'll talk about more things. Stay tuned as I bring you more information to help you develop your trading as a technical analyst and as a good institutional trader. Till we meet again, thank you.